The crypto market took a massive hit and it's been absolute chaos. Over $2 billion wiped out in a single day, worse than FTX, worse than LUNA. If you're down bad, you're definitely not alone. Even Trump is down $25 million. Bitcoin has recovered well since, but most of the altcoins are still down double digits. Today we'll break down exactly why this dump happened, how these new tariffs could mess with the crypto market cycle and what to expect in the coming weeks. And of course we'll talk about the best way to navigate this mess. Alright, let's dive in. So what kicked off this market meltdown? It all started with the White House confirming that Trump is slapping 25% tariffs on imports from Mexico and Canada, plus a 10% import tax on Chinese goods. And that's just round one. Now, if you're wondering why that matters for crypto, let me explain. These tariffs could have huge implications on the entire economy. Typically, tariffs mean that the price of goods increases, and that can directly impact inflation. You might have already seen the price of basic goods rising, and with these new tariffs in place, we can expect that trend to continue. In fact, some analysts are predicting that inflation could jump by up to 0.8 percentage points if these tariffs stay in place. That could be enough to trigger another wave of inflationary concerns. The stock market rally on positive inflation news reversed lower Friday afternoon after the tariff announcement. Investors feared the tariffs would drive up inflation and hurt GDP growth. And since crypto never sleeps, it took the first hit before the stock market opened on Monday. Crypto markets tend to be more volatile, which means they react faster to macroeconomic events, especially when broader market sentiment is uncertain. Fortunately, the stock market did not see a major sell-off at Monday's open, and Bitcoin rebounded quickly from the $92,000 support. At the time of recording, Bitcoin is trading above $100,000, and the broader crypto market has recovered swiftly. It seems like the market overreacted to the news. That's the tricky part about crypto. It's a highly sensitive, reactionary market. Crypto often sees a sell-off over the weekend, fearing a bloody opening for the stock market, even when traditional markets don't react immediately. Now, let's talk about how this affects macroeconomics. Higher tariffs mean higher costs for goods, which leads to inflation. And inflation, as we know, usually has a domino effect. Rising costs for goods mean consumers have less disposable income, which hurts demand across multiple industries. In the case of the crypto market, this is particularly painful because the Federal Reserve has already shown signs of being cautious with rate cuts. Jerome Powell has hinted that the Fed is wary of cutting rates too quickly, which means less liquidity in the market. And for high-risk assets like crypto, less liquidity is bad news. The reason is simple: crypto thrives when there's an ample flow of cash in the market. Higher inflation and less liquidity could create a situation where investors move to more stable assets, pulling out of riskier investments like altcoins and, in some cases, Bitcoin. Short-term, this isn't a great sign. We could see retaliatory tariffs from Mexico and China, in addition to Canada's 25% tariff, which was announced earlier. This could escalate into a trade war. The bullish Q1 we expected might turn out bearish. However, there's still a chance that Trump announces some sort of tax relief or tariff pause. During his inaugural address, he mentioned introducing tariffs to fund tax cuts. Lately, there's been speculation about tax cuts on cryptocurrencies. While it's just a rumor at this stage, if it happens, it could be a game changer for crypto. Looking at the bigger picture, this could actually be bullish for Bitcoin, as it might reshape the entire 4-year cycle as we know it. Rate cuts may be paused due to higher inflation, and quantitative easing could be pushed back to 2026. Without a massive liquidity injection, we won't see a full risk-on rally in 2025. Typically, Bitcoin follows a 4-year cycle, experiencing a boom-and-bust pattern tied to its halving events. But if traditional markets struggle, Bitcoin could break away from this pattern. Instead of a blow-off top in Q3 and Q4 2025, we might see a more steady long-term upward climb into 2026. Of course, this is just a theory, but I personally don't see a bearish scenario playing out for Bitcoin at this point. While weak hands were panic selling at the bottom, Trump's World Liberty Finance bought 86,000 ETH. Currently, Bitcoin has bounced back strongly, and skepticism about the top being in is fading. As I mentioned in my video 3 weeks ago, Trump tends to get what he wants, one way or another. He's already delivered on key promises: immigration reform, cracking down on agencies, and his stance on crypto policies. The one thing he hasn't been able to fully control yet is the Federal Reserve. Trump has made it clear that he wants lower interest rates and a weaker dollar. And if the Fed won't comply, he'll push for changes in policy. These tariffs might be his way of forcing the issue. Trump measures his success by the stock market's performance, and he will do everything to ensure it goes higher. Bitcoin will go much higher. That's my opinion, not financial advice. Alright, so what's the move right now? If you're overexposed to low-cap, high-risk altcoins and your portfolio is wrecked, selling now might not be the best option. This isn't just cutting losses, it's panic selling at the bottom. In times like these, it's easy to react emotionally and sell off assets when the market dips. But remember, selling at the bottom means locking in your losses. That said, everyone's situation is different. If you're in serious trouble and need liquidity, then sure, cutting some exposure might make sense. But personally, I don't see the market slipping much further. Most of the leverage has already been wiped out, and while things are rough, we've already absorbed a large portion of the market's losses. Could I be wrong? Of course. Crypto markets are notoriously unpredictable. But based on the current data, I don't expect a full-on collapse from here. To sum up, short-term things are rough, and we might not see the post-halving bullish Q1 we were expecting. But long-term this could change how Bitcoin moves. If Trump pushes for tax cuts or stimulus, that could trigger the next big run for crypto. We might see a new cycle emerge, one that doesn't follow the traditional boom and bust pattern but instead moves more steadily upward. Let me know in the comments, do you think we're bouncing soon or is there more pain ahead? Do you think these tariffs will push the market into further chaos, or will crypto find a way to power through? Don't forget to like, subscribe, and I'll catch you in the next one.